Hi guys, quick update here for YouTube. It's 5th of June 2025, Thursday. Hope everyone's doing great. If you want to know more, just come and join the group. If you want to pay via crypto, everything's here. We've got both the mini and the full versions of the masterclass, the educational course. If you purchase this course over the next couple of weeks, you get 1 month free access to the group. And then we've got the mortgage amortization course here. If you would like to know about part 2, that should be out hopefully before the end of the year. Now, I urge everyone who's new to the channel, have a look through the calls that we've made here over the last 7 to 8 years. You know, we've been calling for the Dow 40,000 going as far back as 8 years ago. In fact, one of the very first videos we did, other than calling the Bitcoin crash from 20,000 to 3,000 6 months before it occurred, was the big fall down in the dollar, which is currently ongoing, as well as the Dow to 40,000. You know, that was over 7 years ago. Now, looking at the S&P, obviously we've had this big crash down on the Trump tariffs. We're looking at that as a wave, 4 relative to here. There is one more wave up before we're looking at a, grand super cycle correction here, which is likely going to take us all the way back down. I would say as an absolute minimum expectation would be down into here. Now, we're calling the top of all tops here. So right now we're not quite there yet. We had this big sell-off. We've obviously purchased SPYs, Leaps, as well as SPXL. These were very discounted prices. That is one of the biggest that is probably, top 10 moves ever on the ES. That 4-hour move there that we got in early April. And now we're looking to offload as we approach new highs. Now, my expectation is we are going to make new highs here, probably before the end of Q2. Then we're going to go into a correction. Obviously, I don't think we're just going to make new highs and then immediately crash from there. This market, we're still looking at higher prices, but we're going to start to offload some of our leveraged and some of our ETF exposure there. SPXL is a leveraged asset, so you have to be careful with that. I don't think it makes a new high. As the S&P makes new highs, that basically proves that... helps to confirm the decay aspect, right? So if I show you SPXL here, it's unlikely to make a new high. Now, the plan was to offload this at 190. The actual target is going to be 210. Now, of course, it is going to be close, but you're going to be very careful with these ETFs. The S&P was down 20%. This was more like down 60%. So the plan is to offload this as we clear these poor highs. But likely the SPY will make new highs first, and then we're just going to slowly offload this to all the retail traders who don't know how to read a chart and are just going to FOMO in with the S&P making new highs. Now, is that the end of it? No. However, when you're holding leverage products, you have to be very careful. It's very hard to find a double. No stock in the stock market is going to double from here, or is going to double from the 31st of March lows. That's why you had to go for SPXL. Either way, new highs, short-term correction, and then we're going to continue. Like I said, we're still looking at the 4 6s, and on the Qs, we're looking at 3 6s. So it's a lot safer to play the index when you're in the last part of the wave. As we have established already many times, we don't feel this is going to make a new high, and never has this not made a new high with the S&P. Which basically proves that the count that we've always had is the correct count. We're going to make a new high, and then we're going to undergo a grand super cycle correction. That is going to be a devastating crash, and we are closer to that than we've ever been. So if you want to know more, just come and join the group. Now, obviously, there's a lot of money to be made, both on the upside as well as the downside. Now, Bitcoin, we've covered this before. We can't give away the exact target, but we're looking at an interim price of around 140,000, as I mentioned on my last YouTube video. I don't think there's any real benefit in over-analyzing this. I don't think that really benefits anyone here, and by that I mean, excessively trying to figure out, if that's a wave 1, looking at a wave 2. I think it's fair to say a pullback to 98 to 100,000 may happen. We're pretty much already there, but I'm not expecting this correction to last much longer. Quite possibly, money is more rotating in the S&P right now as opposed to Bitcoin. As the S&P makes a new high, you get that FOMO kind of kick. We'll be offloading a lot of the leverage products, then there'll be a subtle rotation into Bitcoin. So these are obviously correlated markets, and neither of them are anywhere near a top. However, they don't move hand in hand. Like, they don't move at exactly the same time or the same rate. As you can see, S&P has been outperforming Bitcoin for at least the last couple of weeks. But generally speaking, they are both liquidity assets. There's no justification from current prices of a major S&P crash or a major Bitcoin crash. Eventually, Bitcoin's going to go 2,000. I won't tell you how high it's going to go. That's only for group members. We're just giving it out there, 140,000. I think that's very fair. I can't really give away more than that. Eventually, the S&P is also going to undergo a severe correction to 666. However, at time of doing video, we're not there yet. We need to engage in this rally, this final melt-up phase of mankind, and we need to get everyone trapped at these higher prices. Like I said, when you're holding leveraged products, time decay can really hurt you, especially on the options. As for triple leverage ETFs, the decay kind of kicks in as well, because it's not cumulative. It's not day by day cumulative. It's the leverage nature of it is reset at the end of the day. So because of that, it creates a decay. The longer you hold it, the more decay you're liable to get. So you got to be very careful with leverage ETFs. However, we identified sub 5K. It was a tremendous opportunity. Long term, you're not supposed to use triple leverage ETFs. They were originally designed for hedge funds to hedge their futures position. Anyway, so going back to the whole correlation with the S&P, there's no justification for a major sell-off here in Bitcoin. However, subtle rotation, S&P makes a new high, get a bit of that FOMO, retail, go into a bit of a correction. During that sideways correction, Bitcoin will then make the next step up. I cannot call a Bitcoin crash from here. So, Bitcoin still higher. Short term, bit of a correction. It's not really relevant. It's highly improbable, with a probability of 0, that the S&P or Bitcoin is going to top over summer. By that I mean May, which is already gone, June or July. If it's going to top, as an absolute minimum, you would expect it to be in August. Even then, likely, this is going to push well past Labor Day, the way things are moving. So we're nowhere near a top. The market's going to go higher. Over summer, low liquidity, low volume, there's going to be some trouble there. So I see nothing for Bitcoin here other than short-term consolidation followed by higher prices. We spoke about the dollar in the last video as well as the pound. We know where those two currencies are going. Once again, we cover everything in the group. So if you want to know more, let us know. Just come and join the group. As for the Bitcoin dominance, well, for the longest time, we have said where it's going to go. It's effectively a large flat pattern. And this, whilst no one's discounting there might be occasional moves here and there from the altcoins, unfortunately, other than the short-term blip here and the short-term very small altcoin seasons we've had here, we had one here, suppose we had one here, and yes, there were exceptions to this rule. Solana did very, very well as this was going up. Is Solana an investable asset? No, we bought it at 5, we sold at 200. There's no money to be made in Solana. Even if it goes to 1,000, doesn't matter. Same with Nvidia. Nvidia could double from here. It's not the point. We've already made our money in there. So can Western Alliance. Not the point. When you've made your money in a particular stock, and we've called all of these on the group, as well as these are just the calls we've made in the last 18 months. Forget about the last 7 years. So anyone who's been part of the group here has done very, very well over the last 7 years. So if you want to know more, come and join the group. But better yet, just educate yourself. Frankly, I'm giving it away. I could charge 5 times as much and still get sales there. So anyway, going back to the Bitcoin dominance, in effect, it's a large flat pattern. So there's no doubt I am forecasting eventually the biggest altcoin season that we've ever seen. Bigger than 17, which we called, and bigger than the one in 21. Because after the flat pattern is over, obviously we're going to correct downwards. This is not just going to continue to go to 100%. Now, people are getting very scared off the altcoins. They're dumping their altcoins. There's a lot of bearish headlines. We're not quite done yet. I think this can still extend to at least the 7-0. Following that, it could just about run some of these highs up here, just like this ran this high, this ran this high. There's a chance we could run the last high, albeit by just a wick. So I'm looking at 70 to 73%. When Bitcoin dominance is going up and Bitcoin is going up, there's no doubt BTC is in control. And we've identified this weeks and weeks and months ago. I don't think anyone can have a high allocation to stocks or a high allocation to altcoins. Okay, Bitcoin is effectively like the index. It's much safer given where we are in the cycle here. Bitcoin is completing a super cycle up here, and over the next 12 months, you would think S&P is finishing off a grand super cycle. We've always identified and said this from the first YouTube video. In that last wave, which we're in, it's much safer to play the index. So that's the problem with the altcoins. It's not that they're crap. Some of them are very good fundamentally. XRP, XLM, like XRP. I mean, you know, there's a lot of YouTubers pumping this all day, every day. The problem, I mean, that's not the real chart, is it? There's one on Kraken, I'm sure. You know, you could just read all of that as a complete swing failure or a shakeout pattern as we teach it off that high there. In which case, it's going all the way back down to here because all of that inefficiency has to be filled. Now, going back a few months ago when we had that mini dip in the Bitcoin dominance, there was a chance we could have gone into a larger correction. Clearly, volume then had come in, the price recovered, and the Bitcoin dominance clearly wants to go to 70%. So whilst there might have been a bullish count to $14, currently I don't see it. Because it's not the USD side of the story that we're worried about, it's the Bitcoin. It's the altcoin BTC pairings which we're worried about, which once again are driven by this. So whilst there was no doubt around about here, late last year, early January, which is very common for a quick 6-week altcoin season, there's no doubt we got some nice pumps across the board. Where does the Bitcoin dominance actually want to go? When is the next trending altcoin move? How's that? Rather than short-term blips, when is the next trending move? When is the next big trending move in altcoin to last multiple months? Like 17, like 20, 21, whatever, post-COVID. It's obviously not here just yet. Because after a flat pattern is over, as an absolute minimum, you would expect a recovery to 50% of whatever this was, of whatever the move up was. So where does that get you? Round about 50%. Let's say it goes to 73, let's say. Well, the 50% fib is here, 51%. And that is the altcoin season. The move from 73 to 50. Best case scenario, it's the biggest altcoin season of all time. And we go all the way to here. So I have no doubt a gigantic altcoin season is coming. Unfortunately, at time of doing video, it's not here yet. This is where the Bitcoin dominance wants to go. And I think you can get into analysis paralysis by over-analyzing these charts, right? We were all over these charts when we had to be, which was around the 5K lows. Right now, it's actually quite dangerous over-analyzing this situation. No one cares about the count, okay? But when it was down here, we had to react, okay? You have to know when to step on the gas, when to hold off and press on the brake. And when to just sit back in that holding position. Right now, we're in a holding position. It's very clear S&P wants to make it to new highs. Once the highs are taken out, then it's time to start to offload, just in case we go into a sideways correction. Obviously, we don't think 6100 is the top. We have extension targets in the group, and we have the actual mathematical targets for where this S&P is going to get to before it undergoes a very severe correction. I mean, I see no reason why it can't go to 1,000. I see no reason when it does top, it can't go all the way back to 1,000. In fact, it would be odd if it didn't do that, because once again, it's all Elliott wave. The news doesn't matter, Trump doesn't matter, this, that, and the other tariffs, those are all a waste of time. So if you understand all of that, take the masterclass while you still can, whilst it's still on sale. Been advised by many hedge funds to take it off the market. And they're paying me very handsomely for that, but I refuse to do that. As I refuse to give in to advertisements too. Anyway, that's the case with the S&P. We're still long, but we're looking to make some changes there to the portfolio very, very soon. As for Bitcoin and the Bitcoin dominance, well, unfortunately, your favorite altcoin is still going to suffer. I think it would be dangerous, frankly, to have too much of an exposure to altcoins at this time. Like I said, a very big altcoin season. I mean, technically, if you were to look at it, all of that is the cause. Everything since the first YouTube video has been setting up for this big cause. What is the big cause that we're referring to? Another one of these, right? Because you can read all of that as the A. All of this since the first YouTube video was effectively a gigantic 7-year ABC. So we must get a move that is relative to the first leg. Okay? So not only could we go to 50% and frankly 34%, we could even have this, right? Okay? Because what is the algo target? And this is the ultimate, moon boy, altcoin moon boy, wet dream here. That's the algo target, 23. But once again, that's all Elliott. There's no denying that. No one can, come out here in the comment section and say to me that can't happen. Of course it can happen, right? Okay. Likely I know more than you when it comes to reading a chart, and that's all Elliott way. This is exactly what we teach. We don't teach here crappy things like cloud cover, like with Michael Fish back in 87 when he was an MC Sparking telling us, oh yeah, nothing's, type in Michael Fish there. I was trying to show you the Ichimoku cloud when he's back in 87. He was an MC Sparking telling us nothing to worry about, and then next thing you know, the biggest tornado that the UK has ever seen, and the neighbour's gazebo's halfway down the M6. So no need to use this nonsense, right? We don't teach nonsense here, right? We're not Sean Lloyd and we're not Michael Fish. The legend that is Michael Fish. I cannot believe I just tried to find an indicator called Michael Fish. I think that's time to end this video. Those who know. All the legends from 1987. Anyway, so that is the case. Let's just get rid of this. We're not the weather channel here. Right, good. So if you want to know more, come and join the group. But that is the story with the Bitcoin dominance. A fantastic altcoin season is coming, just not yet. I see no reason why this can't go to 70%. And like we said, the ultimate, lesson here is, as we always say, when Bitcoin is trending up and the US dollar tether dominance is going down, but especially the Bitcoin dominance is going up, Bitcoin is always going to outperform. There has to be at least 95% allocation to Bitcoin. When Bitcoin tops, at least a short-term top, interim top, or the actual top, and it starts to consolidate and go sideways, like it did in 17, 18, like it did in 21, and the Bitcoin dominance starts to fall, especially when it starts to fall precipitously, right? Then we get a gigantic altcoin season. So, got to be very careful here. XLM, XRP, even, Solana, I mean, to me, it's an uninvestable asset. I mean, we don't care. This could go to zero because we buy low, sell high. So, I've pretty much drawn out there, hand-drawn what it's going to do. You can easily read 5 into there. No one cares. It's taken out of the high. There's so much inefficiency underneath here. Got to be very careful here. Once something has made its move, like even Nvidia, frankly, I'm not really interested. It's like we've already made the killing in the move. The move was from here to here. That was it. That was the big move. From pre-stock, well, these are post-stock prices of here, post-stock split. I just did prices here. Why go for the risky move to 200? Likewise, Coinbase, right? We've gone over this. I think it's risky. I think it can go to 419 because I'm using Coinbase as a proxy for getting retail traders, normies, trapped into the actual top in Bitcoin. So I think Coinbase making a new high makes a lot of sense, but I think overall it's still risky. Once again, we were buying down here, selling into here, so we don't care. This could go to zero for all we care. And there's a very good, mirror kind of image here, which we discuss here. There is a level of symmetry which you can see. So imagine there was a mirror there. I'm not able to show you on the fractal because I'm trying to basically mirror this entire fractal here. So imagine, well, that is the fractal there, right? So imagine there was a mirror here, right? Clearly, this looks like this bit. All of that looks like all of this. this little downtrend, well, uptrend here looks like this downtrend. This final little leg up looks like this, right? So it's definitely a very nice kind of mirror image here. I mean, please, I don't want to hear comments of that's an inverted head and shoulders and all of that is, you know, that's going to go to 3,700. Let's not even go there, because if all of that is a head and shoulders, I think people need to start watching their weather channel. That is better for them. Every day a sucker is born. So Coinbase, I think it's risky, but it makes sense though. Coinbase I can kind of get with because of the Bitcoin proxy. But Nvidia, Apple, I mean, Apple's seen better days. I mean, you know, that's going to go to about 50, Apple is. So this is the biggest story out of everything. And this is what they're hiding. But once again, if you know how to read a chart, you know how to decipher what's going on, you can stop yourself getting trapped. Like I said, longer the days where it was an S&P 500. It's been an S&P about 4.5 for the last, frankly, 5 years. And right now it's like an S&P 1 or 2. When the greatest stock in the history of mankind doesn't make a new high and the S&P does, you know you have problems. I see no reason why S&P can't go to 1,000 after it's topped. But right now, we're going to 4.6s and possibly a little bit higher than that. Anyway, if you want to know more, come and join the group. I recommend the educational courses to everyone, and I'll see you guys over there. Take care.